Well, this is Michael Douville coming to you from beautiful Phoenix, Arizona. It's May 3rd, 2021. I'm back from a wonderful vacation in Mexico where people were having fun. The plane was full. People were spending money. The economy is literally on fire. And jobs seem to be coming back. Now, there's still portions of the economy that are still struggling, but I think they're going to recover. We seem to have had a really vicious, deep recession, but it was a short-lived. And I think we're recovering and recovering very, very nicely. And I think we're getting to the point where we're almost where we were before. So we might be saying we recovered. So it was really probably one of the shortest ones we've had. Now let's go right to the slide so we can take a look at some of these. And I think there's some really, really exciting things to see. Now in 2020, in December of 2020, Goldman Sachs came out with their annual forecast for 2021. They had said that the first quarter, we could maybe get as high as 5%. General consensus was at 4.6%. And 5% was a very, very optimistic number. Now, right after they came out with that forecast, we got the stimulus, lots of checks went out, money went out. I thought we were probably going to do better than that. If you follow my video, I thought we could get to 6. And look, we got that number last week, 6.4% GDP for the first quarter of 2021. That is absolutely amazing. It means the economy is on fire. Fortunes are being made. If you're in the right section and you maintain the right asset class, you're going to do very, very well. Now, Goldman came out and had an astounding, this is an astounding figure for second quarter. They thought it could go as high as 8.5. We're talking about more stimulus. The administration is talking about putting even more money into it. So this could actually become double digit for Q2 of 2021. It would mean that the economy is just going on all cylinders and jobs are plentiful, business is really, really good. Now, this is not sustainable. So when things go back to normal, it's going to feel like it really has slowed down, and it will slow down, but it's not sustainable at this growth. We're not going to be able to keep this pace up in all sectors of the economy, but let's enjoy it while we can. I think we've got another 3 or 4 or 5 months, 6 months before things really start to kind of slow down and everybody takes a breath, because normal will be good. Look what's going on in manufacturing and industrials. The ISM number is at 62.5%. This is an incredible index number for us. 50 means that things are are okay. Above 50 means the economy is expanding. Below 50 means it's contracting. Typically, it doesn't go more than 53 or 54. And here we are at 62.5. Now, when we talk about the economy exploding, there's lots of demand. And what happens when you have demand? You have prices going up. You can see this incredible price surge right through 2020, latter quarters of 2020, right into 2021. Prices are going higher. You follow my work. We've been talking that we're starting to see inflation. It's an inflationary cycle. This might be with us for more than just a couple of quarters. You might see us for a couple of years. So you might start thinking of protecting your purchasing power. Talk to your financial advisor, of course, and see what's good for you. But it just means that you just need to adjust your portfolio and adjust some of your asset classes. Look what's going on in copper. They call it Dr. Copper because copper is such a great index, and it's indicative of how the economy is doing. And you can see the price of copper just fell off the cliff. Hasn't been that way for 10 or 12 years, right at coming out of that terrible great financial crisis. And we've got a really low reading in 2020. But after we bottom, remember we were saying it's probably one of the shortest recessions we've had. We've just had a resurge of prices, and we're almost where we were in 2010 with some of the highest copper prices, which means copper is in demand, being used all across the globe. I mean, it's in refrigerators and air conditioners, automobiles, it's in home wiring, it's in TVs, it's used absolutely everywhere. When you see the price of copper going up, that means the economy is going up with it. And we've got great economy. But also as price of copper goes up, it indicates that other prices are going up as well. Look at this next slide. We're talking about agriculture going up. So it's not just demand for one basic materials like iron ore and aluminum and copper. We're seeing this across a lot of different assets. We're seeing this in agriculture. So you're seeing this in wheat and corn and rice. And of course, you're going to start seeing this in feedlots. You're going to start seeing cattle and chicken prices and pork prices are going to be going up. So it's inflation across a broad range of industries and a broad range of asset classes. So you need to start thinking that prices are probably going up. Your home is certainly going to go up, but a lot of the prices of things that you pay, your gasoline has gone up, your food prices are going up, paper products are going up, lumber is just going up like crazy. So you need to talk to your financial advisor and see what's going to be good with you. This is going to be with us for a little while. So you might start thinking that maybe we're in an inflationary cycle, probably more than just a quarter or two. And there are things that you can do for that. You just rearrange your asset classes. Now, here you have our CaseShiller. Now, these are all courtesy of Zero Hedge. If you follow my work, you know that I nailed the correction in the housing market in March 2018. The timing model told us exactly when that was going to happen. We knew it was going to be a fairly strong one, and it didn't recover until the fourth quarter of 2019. So it was on for a good long time. It's a great time to be, we knew this was a correction and ongoing bull market. It was a great time to be acquiring some properties. We knew it was also going to be a double correction because our model said so. And as you come up here, you can see in the fourth quarter, we got this pop into 2020, and then we got that COVID recession. Now, I didn't know why we were going to have that. Who would have expected the economy would have been shut down for a virus? And who would have known such thing? But it was on our charts that we had some kind of a correction coming. Indeed, it was a short correction, just like the recession was a short recession. We got all that stimulus money. Remember, if you follow my work, I talked about the fact that we were going to see prices go much, much higher. Part of that was because we had that stimulus in 2020 from a recession. Trump put out $6.3 trillion between the Federal Reserve and the Treasury. It takes a while for it to work into Main Street, which is where housing is at. And you saw that spike. We've seen a spike in prices come straight up, and it has to do with a lot of that liquidity that was coming in. But that's the why. And we knew before we were going to get that because we had the what on our cycle research was saying that we were going to see a much, much higher prices. Now look at this chart. This is our 18-year cycle chart. You can see this. Now we've simplified this a little bit. This isn't our proprietary work. So this is kind of giving me an idea of what's going on. Here it is in March 18. We knew this was coming down. We ended third quarter or fourth quarter 2019 went right up. Now it was on our chart. We knew that this was going to be a correction, another correction, an ongoing bull market. It came down. We thought this would be a great, great time to be buying some properties. And this is a long accumulation phase. This is a couple years. This is probably one of the greatest times for you to start thinking of purchasing some properties because we're going to have this surge again. Now, our cycles tell us what is going to happen, and then the economy tells us why. I'm going to tell you, I think that we've got some more stimulus money coming in, and a lot of stimulus packed on top of some inflation. We're already seeing that FHA has reduced the requirements on the credit scores, and this is going to allow more people to buy homes. So I think that we're going to get this surge, and I think everyone is going to be astounded at how high prices are going to go. You got inflation, you've got stimulus, and you've got fiscal stimulus, changing loan requirements, and I think it's all going to combine to cause us to see some rapidly rising prices, which fits right into our timing model. So you might want to talk to your financial advisor about what his thoughts are and how this might work for you, just so that you can protect yourself, because when you're at my age, in baby boomers, we have to protect our purchasing power. We want to get into an asset class where we continually increase the income coming in. We want to not only stay up with inflation, but we also want to exceed inflation so that our wealth grows as well. Here's a perfect opportunity for you to do that. I think this is going to be very, very strong for the next 2 or 3 or 4 years. I think you have an opportunity to make enormous returns, but certainly talk to your financial advisor. We're here to talk to your spouse, your financial advisor, your accountant, your estate planner. And let's go to this next one. Now, on my vacation, I talked to a lot of baby boomers my age. They talked about the fact that they'd gone into real estate and had bad experiences. Let me tell you, when I listened to them, I realized that they had just gone out and just bought some properties. They had no idea what they were buying. They had no idea what the return on investment were. I actually had someone, I said they had a bad experience with a tenant. And I said, did you pull a credit report? And they said, I didn't need to. I had a really good feeling about this one. I had a really strong gut feeling that they were going to be fine. And I said, how did that work out for you? They said they were terrible. They were terrible tenants. So I'm going to tell you, I'm very proud of these two books that I put together. These two put together are kind of my gift back to everyone. I'm a little mercenary about it because I'm an author. This is kind of fun for me. How to Create a Real Estate Money Machine. We talk about why you want to do this, because you want to have income in when you're my age. You don't necessarily want to be selling your assets off. You want your assets providing you an income stream that you can live on, prosperous, go have fun, have a great life, and you don't have to work. Because when we retire, we're retiring from our income. You know, when you're used to working all the time, you get a paycheck. When that paycheck's gone, it scares people. But this allows you to get an income stream. Now, if you look at my real estate investing for beginners, it takes you by the hand, takes you through financing. It takes you through these pitfalls. You know, most of our tenants are just wonderful. Most of our tenants last for 3 to 5 years. Some have been there 10 years, 15 years. They pay like clockwork because we are very careful when we put them in. And we use property managers. You know, these property managers are professional. So if you like these, take a look at the books. They're going to really help you along, because I think we have inflation coming. And real estate is probably the investment hedge you can possibly have. Talk to your financial advisor, see if that works for him. Now, you can always reach me at michael@michaeldouville.com. I'm here in Phoenix. We're going to help you every way we possibly can. Our market here in Phoenix is on fire. There's a lot of good ones around the market, around the world, around the country, around the world. But in the United States, you got Florida, Texas, and Arizona. Now, not all places in Florida and Texas and Arizona are going to be as good as others. We're here in Phoenix. We're probably the #1 market in the United States, probably in the world. Business is absolutely outstanding. Our prices are keeping track with the rent, so we don't have a bubble. I expect that we will get a bubble. I expect that prices are going to explode to the upside to a point where we're going to be in a bubble territory. I don't believe we're there yet, but I think we're going to go there. But it might take 2 or 3 or 4 more years from now, in which case we are going to make an absolute fortune. If I can help you make an absolute fortune, be sure to give me a call. We've got a great staff here, and we are very, very good at what we do. If I can help you in absolutely any way, I certainly will. My very best to you. Bye-bye.